Ooh, I need your top line. Yes, you know it's true. I just want some of that hotline and stick it in my face. Top line, hotline, top line, hotline. I just want to spread some of that top line on every orifice of my face.
He was sandbagging Asid right before. For all of you that are just
I don't know.
listening, Sam spent 10 minutes trying to come up with that ditty and said he didn't have it. And then
Nod
here
to
it
the
is.
Beatles. The Beatles.
Oh man.
Welcome to Topline Hotline, short segment. We answer questions about go-to-market posed by our listeners, often now from the Topline Slack channel, which is free and home to just about 200 of our most loyal participants. Members of the Slack channel get all sorts of additional benefits. They get VIP access to the Topline conference, which is coming in 2029 and will be held in Dubai. And they also get a coaster. And they get to do some of our ad reads. If you haven't heard, Jesse Shipman did an ad read for us this past week, which was fantastic. And I would love to hear from all of the great Topline listeners like Ryan Milligan. Let's get him doing an ad read. Let's get Charlie Moss doing an ad read. Let's get all of the good peeps. Jonathan Moss as well.
Yeah.
Anyway,
I think coasters are underrated. I've been thinking about underrated, overrated. Coasters are underrated.
Coasters are fantastic.
Yeah.
I got a question for you guys. This was definitely not the hotline question. I just got a new desk, stand-up desk, courtesy of my wife. She's awesome. It's wood. Do I need a coaster? How do I know if I need a coaster?
If it's real wood, you need a coaster because the water condensation thing is going to leave a mark. My mom told me that.
Okay. All right. Yeah. Coaster. All right.
Coaster it is. Okay.
We answered the hotline question. Good job.
So this is from our Slack channel. One point that spoke to me about last week's episode, referencing the episode with Mark Roberge, was Mark's comment about not enough entrepreneurs attempting to use AI to build and sell products with significantly smaller teams, referring to his Workday example, which was basically a 2 or 3 person company that builds the new Workday for much cheaper. I believe this is the future, and through a combination of zero-based budgeting and the use of emerging tech, AI, no-code platforms, etc., startups will be able to get to product market fit at significantly lower costs and fund growth through improved profitability. That said, I'm curious to hear others' thoughts on A, how might the role of venture change in a world where companies can get to product market fit and profitable, efficient growth at reduced startup costs? B, what sanity checks should founders put in place to make sure they aren't biting off more than they can chew as they attempt to launch a SaaS platform with a skeleton crew and reliance on emerging techs? I'm a non-technical first-time founder who's embracing this ideology, and I'm 2 months into building a SaaS platform without a technical co-founder. While I'm optimistic, Mark even said, I don't know if this is feasible, referring to the ability to launch a platform such as Workday with a small crew. And I do lose a lot of sleep wondering if I'm being overly optimistic about the current state and capabilities of some of these techs I'm leaning into. Curious to hear how others would approach.
Well, if you listen to our most recent episode on Topline, we went into this a little bit on product market fit. First off, I've heard from a lot of listeners that listened to the Mark conversation, and that was their biggest takeaway, was the point that was made around customers and startups are thinking too small, and are they really solving business problems for the long term? So it was really interesting there. The answer is, if you did listen to our episode, product market fit is not that easy, and it is not going to be faster to get product market fit. And I believe that's a fallacy. So
does that, but the question specifically was, how might the role of venture change? So you think it doesn't change?
I don't think it changes. Yeah, because venture, the role of venture isn't to get you to product market fit. I don't believe it. It's to give you the resources to invest in the right people and the time and allocation to find it. But venture itself does not get you to product market fit.
Right. No, but the point is, what you're saying, I think, right, is like if getting to product market fit, which again includes market, so like means making money, building a good business, you're saying it's not going to get any. Are you saying both it's not going to take any less time, and it's going to not be any cheaper.
Right.
The reason I brought up venture is because if you assume it gets cheaper, then venture has less of a role to play. If you assume that one of the constraints to somebody's ability to have it take a long time is capital.
Oh, that's a good point. Yeah. Well, Sam, turn it over to you. What do you think?
Let me debate it. I have the other side of it. I wanna debate. Maybe I like debating too much.
I think you should say what you just said more often, Asad. You say "let me debate" as opposed to "I disagree,"
Yeah.
and then it turns out, and we're like, "What did he disagree about?" And then it's like it's unclear. And then you're like,
I like to debate. I just want to debate it. So I think,
by the way, Sam usually just goes, like most things, I agree with AJ. So you could just do that.
that is just not true.
I do say that mostly.
Okay. I think the other side of that is if early product market fit is about problem validation and then solution validation, I think problem validation, AI can maybe help a little bit, but there's still a lot of hand-to-hand combat, a lot of conversations. It's the manual part of that, I don't think goes away in the very near term because of AI. I think solution validation, at least the theoretical one, again is hand-to-hand combat. And so that is still going to take some time based on the technologies as they are today and where they will be in the next 12 months. And this person's in the field today. So I don't think that early product market fit is going to be remarkably more efficient today. But I think the next few stages of product market fit actually do get easier. Because one of the things we already know is that the Copilot is making people 60, 70, 80% faster when it comes to coding. And that just increases the pace at which you can ship and build and ship and also test. And so I do think that getting through the second, third stages of product market fit probably becomes a little bit more efficient, cost efficient, time efficient, all of that. And that's where I think, based on where we are today, the advantages are going to come in.
Okay.
And so I don't think that changes the venture game for the early stage today, just today. But I do think that it does impact the need for follow-on rounds, like the need for the type of growth capital that we've seen some of these companies consume. I think that even in the nearish term can change a little bit. So that's the counter side of that, other side of that.
You finished the thought I was going to ask about, which is just the later round and the how does that change venture in the later rounds? Point taken. I don't know if we know the answer to this really yet, and I'm not sure if we have any data to support either side of this argument around.
Well, one thing we know is that Roberge said in the show that everybody's moving downstream, meaning moving to. Yeah. I think it would be actually
that happened in 22, but is that true? I was actually going to ask the question on that, and I'm not sure. I
just think it's easier to make money in seed and Series A for exactly the reason we're talking about than Series B and C, because like you're doing a Series B investment, you still need to always believe that you can 10x or at least 3x, 4x, 5x, and you're buying in at 50, 60, 70, $100 million. So you need to feel very confident that there's a $300 to $500 million exit. And I feel like, I don't know.
Anecdotally, that's probably true, but then, or from Mark's side, that's probably true. He wouldn't have said it otherwise. Anecdotally, from my side, I'm seeing it slightly differently. Insight did our Series A. They don't typically do a lot of Series A's, and they've gone, from what I can tell, they've gone more to growth equity as well. You're like, no, Asad, you want to debate that?
No, that's a great point. I think you made a great point.
Yeah, solid.
One of the best points.
Probably the best point I've ever heard in my life.
I would say. That's what I would say.
At least in North America this year, I don't think a better point has been shared with the world.
This is my technological deficiencies being shown, and I'm catching up. I'm like catching up on it. Wiser. The point I just made, which was Insight.
They all heard it because it records on your end, so you don't need to repeat yourself.
You heard it, but you need to debate my point. So you guys are the important ones.
Distill it quickly.
Insight is went down market for us to Series A. They've gone back up market to growth equity since.
Oh, that is interesting. There you go. Well, what's the debate? Like you said, it's a fact. So,
well, it's anecdotal. So, all right. I've run my course in this conversation. I've done my job. My internet's done its job. We're good.
Great. It's time for a cold plunge. It's time for a run, and not in that order. I do think that the role of venture will change. I think there's going to continue to be an opportunity for people to make money writing million checks, but I think it's just going to get way harder to make money writing 30, 40, $50 million checks, particularly if interest rates are persistently where they are, and particularly if the companies don't need that much capital to be far more efficient. But we could be wrong. Who knows? That's our answer. Thanks for listening to Topline Hotline. We didn't get to the second part, which was what sanity checks. Well, let me ask AJ. Let's ask you this as the person, as a true founder. What sanity checks should founders put in place to make sure they aren't biting off more than they can chew as they attempt to launch a SaaS platform with a skeleton crew and reliance on emerging tech? What's your advice before we go?
You're going to make a ton of mistakes. Recognize you'll make those mistakes. Take it one day at a time. Work backwards from what you want success to look like. If you want to get on stage and raise millions of dollars,
he's asking like, how do you know? How should he know? It is a he that he's over his head. He's in over his head, and he needs to like go ask.
Yeah, and he said he's not a product technical founder. At that stage in the game, and your first time founder, you're not technical. I don't think there's such a thing as too many cooks in the kitchen. Rely on your network and ask. So join.
How do you
make sure
know?
you're in Pavilion. Make sure you're talking to people, talking to CEOs, talking to other founders that have done it before.
Nightmares. You don't wake up in cold sweats.
It's
That's usually a sign that something's stressing you out.
It's a lonely road.
There's actually physical signs where like you actually notice like this is extremely frustrating. Let me go and get some advice about that. I also think that you have to trust your ability to research and reason. Like where you see the technology is viable, lean into it, right? Like if you notice that the Copilot is across the board viable, lean into that. Like where something else seems a little bit too theoretical today, like don't lean into that. Like be logical about it and stop thinking that anyone can launch a platform out of the gate. Even with a lot of money that they've raised at the early stage, no one launches with a platform. I think that's the other
Sam had the best advice. Go do a cold plunge. That was his advice.
Thanks for listening to Topline Hotline, everybody. We'll talk to you on Sunday for the next new episode of Topline. God bless you.
Bye, everyone.
Bye.